Welcome back to Rise Exchange. Now, Ethiopia relaunched its stock exchange and Ethiopian Securities Exchange last Friday after a 5-year absence. Here is a panel held by the Ethiopia Capital Market Authority on the future of capital markets. Let's take a listen.
Once the company is ripe to go for an IPO, typically you need an investor. Can I say, to fatten the cow first? And you actually see in the M&A deal, it's a very good avenue for investors, particularly PE funds, actually creating value, because they're able to actually pre-invest before the entities are ready for an IPO. So they are there. The valuation remains a challenge. IPO candidates remain a challenge. Sometimes the valuation ranges between the buyer and the seller is a challenge. We have seen due diligence questions, particularly lack of information on the entities which are trying to sell stocks, or where the investors try to invest, where there is actually not transparency information. So those are some of the challenges. But once we get a good partner pre-IPO, they are able to fix that. And that's also what happens in the case of Equity. I'm not saying their books were bad before, but Elios and the rest who invested in that, I believe IFC was also there at that point, were able to create more value and provide capital for growth, to be able to realize better prices for then investors.
Allow me to address it from what the CEOs are saying globally, from a survey that we do talking to many CFOs. And in East Africa, we talked to 55 CEOs on areas around ESG. And they say in the next 3 years, they'll be using ESG strategy to drive the business growth. And that we found very, very interesting. 55% globally, 48% saying in Africa, and 34% in East Africa. So out of the 55 CEOs, they are very confident that in the next 3 years, they'll use it to grow. How are they using it? In areas of attracting the next generation talent. If you come back to Ethiopia, what is the population size? You have the answer. What is the dynamics? You'll find there are so many young people. So those young people will not work for organizations that are destroying their future. If you want to understand, ESG is what we call the tragedy of the commons. We have a common grazing area, and do you imagine that tomorrow you will graze the cows again? So that's an area. Employee engagement, driving financial performance, and many more areas they are using. On the other side, from the shareholder value, they are now saying there is the social value that is now being calculated. Then the investors are saying, no ESG agenda, no ESG strategy, there is no capital. And I think that's the big dollar question that we need to ask ourselves. Now, coming back to where we are, you're asking, are we really there? Now, traditionally, ESG was housed in corporate social responsibility offices and communications, and then we just do those nice colors, taking pictures, feeding children, seeing the old, and all those things. And all of a sudden, we found we are stuck. And Hikmet has talked, and I think yesterday they talked about the evolution of reporting that has now brought the IFRS S1 and IFRS S2. Those who have adopted IFRS in the countries like Ethiopia must comply with that standard with effect from 1st January 2024. Now, in that particular, those two standards, they address ESG factors. So those ESG factors now will be addressed in the financial statements. And now, before, people were issuing financial statements and then issuing sustainability reports later. Going forward, they are going to be issued together in one document. And what does that mean? The investor will be validating, and there are levels of assurance on the financial statements when it comes to matters of ESG. So before, we would put a picture of Bernard doing something related to ESG, but they will come back and the auditors will be assuring that information. So yes, we aren't there, But I'm happy with the initiatives that we see taking place, a lot of development taking place, and the ESG is quite huge. It is not what we are used to understanding. So yes, I can say we are making steps. There are investments put into it, but there is a lot more that needs to be done.
Trying to get funding for SMEs within the realm of FSD work. We are working closely with capital markets on their crowdfunding policies. And there are also several things in the pipeline which I can't disclose now. But there are examples, like you said, we've done work in Tanzania. We've done work in Kenya around that area. So I'll speak to that as we come to it. Let me address the question of my vision for Ethiopian Institute of CPA, and then thank you for the question, Barnabas. I think those of us that were around the profession know very well, and I tried to address it in my opening remarks this morning, that we don't have enough accountants and auditors to support the economy as it is now. This has been said back in 2007 in the World Bank report on Report on Observers, Standards and Codes, which will be updated this year, I think. So I think with the establishment of the Institute, we can expect many things. We expect a lot of chartered accountants in that space to be qualified within. We expect technician level accountants that will support the economy at SME level. And then we expect therefore we expect auditors to come through as they do their training within the current audit firms available in Ethiopia. But one of the things that I said, again, I think the Training Institute in itself, it's not enough. Accounting and Auditing Board of Ethiopia as a regulator has to be looked into. Is one of the fundamental regulation in Ethiopia to support, again, the capital markets and the economy of Ethiopia. So having said that, I think KPMG, and I know Bernard is looking at me, KPMG and many others like Deloitte and PwC have been wanting to come into this market, but not interested in the investment laws that permits them to be a partner at 49%, right? So I think the government of Ethiopia is looking at that, perhaps so that they can come in as separate entities. Again, if you go back, and I mean, any of you can Google. So ABBE as a regulatory arm is equivalent to PCAOB in the US, ISPAC in Kenya, and all the rest equivalents in FRC in the UK, and the equivalency in Africa. And you will see that if you say like there's been no high-level court cases in Ethiopia regarding accountants and auditors. Correct me if I'm wrong. For example, the wrongdoings, consequences of an auditor giving a non-disclaimer perhaps on the audit report and going to court is unheard of in Ethiopia. So I think there should be a historical change where the regulator and the institute work together to make sure that the members that are that they regulate their members properly, and that whether misstatements are from fraud or error are actually taken to court in due processes. You will see that PwC, KPMG are here, and Deloitte have been fined quite a lot of money in US dollars in high-level court cases, correct? In Africa and beyond. And I think that's where we need to be at, to make sure that auditors are fined and to make sure that finance professionals actually do their work. And when, especially now that we're going public with the stock market, that if there is a misstatement, that these professionals are called to order.
Yeah, certainly the financial services sector leads as a key role in the growth of capital markets in basically almost all the countries that are looked at. When you look at the largely listed entities across most stock exchanges across the world, they'll be in financial services sector.